the recording. All right. So basically, it's pretty straightforward. When we trade, we have kind of a checklist that needs to be done, right? Uh, and this, we will soon have a video about it on what is the priority checklist to do. But let's list down in orders, or not in order, actually, everything we have so far. Can you guys help me in the chat and tell me everything that we have to verify on the chart? Okay. So it can be liquidity, blah, 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 blah. Tell me exactly what we have so far. So I need this to be a little bit more interactive. So please chat and tell me what do we have. Trade away. Trade away. Away. Okay. Relevant liquidity. Perfect. Relevant. Relevant. Thank you. Let me just clean up my glasses because I can't see shit. Okay. Higher time frame expectation. I prefer calling it structural expectation. Expectation. Okay. Um, there's the KM that said too much, so I'll just take one of his things. False reaction. False reaction. Okay. Structure. Structure can be one, even if we have a structural expectation. Intentions. I love that. Intentions. All right. Taking decisional only for it to go for the extreme. I didn't know that this was a confluence baking bits. Continuation entry. How is that a confluence? We're talking about everything we learned so far, and you guys are talking about entries. I don't get it. Intentions coming out of Asia. That could be, and the intentions. Imbalance. I love that. Imbalance. Imbalance. Reverse trading. I love that. Speed and momentum. Uh, I'll include everything into, let's say, break of structure. Okay. Uh, false break of structure, including IF boss. Okay. There's POIs. Okay. POIs. Somebody like I see, it seems like the most important one isn't there. Retail entries. Okay. Enticement. It's good. You guys get the idea. So these are basically some, and there's also more. These Manuel, you're confusing. This is a trade management, not a confluence. Okay. M1, M2, M3 is not a confluence. It's a trade management. So we have a lot of tools in our toolbox to be able to actually get ourselves a better understanding and a better idea of what we are looking for. When it comes down to doing our due diligence in the chart, what I've noticed so far is that a lot of people are scared of missing out into an entry. Okay. So let's say that you are in this, let me just erase all this crap. You are in this, your GBP. Okay. Structural expectation, you see it buy side very clearly. This high, let me put it in red, is protected by this low. So basically here price can do whatever it wants. As long as it doesn't go under this, it's still bullish, right? So intraday perspective can go short and then overall can go in buy side. Okay. When it comes down to identification of intentions and understanding that a structural expectation are just an expectation, I think that a lot of people get confused because let's say they would see this, okay, intraday. They would see this as a false breaker structure, okay? Let's say, let's go here. Then they would see this as an SMT, right? Now they will see this as being equal lows, right? Completely irrelevant. It's okay. Then they will call this an SMT. They will wait until this gets induced, and then what they will do is automatically go into one, and then try to enter from there. Okay, even though there's no entry. Let's say they would enter from here. Do this. They would do this because our Asia high has been taken, and they will do this. Okay. This goes to show that you narrow it down into the intraday play without understanding the overall intentions of the market. Don't try to hide yourself. I know that there's a lot of people here that took this one or take similar trades because they see the liquidity of this SMT. They see an inducement of Asia high. They don't have any break of structure and they don't want to wait for a break of structure because they're overly attached to entering a trade so fast. They will not respect the candle closure already. So they would see price going to that POI. This is the first candle. The next candle is the first one we monitor. Second one, and then the other one closes above. And this is actually what happens most of the time. Being able to enter on shit foundations is basically a mistake. Also, a lot of what people do is they look at my trades and they're focusing on entering with small risk to reward, a small stop loss size. Do you know how long it took me to enter with such small stop losses? You can ask Manolo and Sofiane. We were trading together every day back in the day, and we used to do like 1 to 5s, and we used to have like bigger than 4 pips as stop losses. It Rome wasn't built in a day, and my small stop losses wasn't also built in a day. So try to stay away from the small stop losses for now. Now, do you guys understand now why this is not a relevant FBOS? Even though in the intraday it creates that false break of structure, but why would you expect a reversal from it if the structural expectations are to continue higher? This is to go and back into the difference between relevant and irrelevant liquidity. We have this SMT liquidity, right? And as you can see, it gave a small reaction and continue it, right? No false reaction, so no engineered liquidity. Now you have the Asia high. What did this Asia high did? Has it done a significant low, significant push? No. So why would you account this as a potential reversal zone, right? This is very important to understand. At the moment you're trying to take a trade into the opposite direction of the structural expectation and the expectational order flow, you're trying to catch a falling knife. Point. Done. There's nothing else to explain. Is this clear for everyone? Yes or no? Okay. Structural expectations, even though it's retail, it's the compass, the GPS, it's the direction, you always need to keep this in the back of your hand just in case something goes wrong. If you want to take the buys here and trade into the enticement, this is perfect. You take, let's say, these these irrelevant breakout traders, completely irrelevant because it hasn't made a new high. There's speed and momentum. We are in London Open, middle of the session. You could expect potential volume. You can see here, price comes back. It has induced the most logical Asia low because this is wicked. You can check on your MT4. It comes back. It fills the imbalance. It creates zero internal false breaker structure because this is a completely stupid. Pushes higher. False reaction of those break and retest comes back into the POI. Doesn't make a new high. Unfortunate. Comes back into the non-decisional POI and then continue higher. With your current skill, this is a trade that you should miss. This is too advanced for you because I haven't taught you this way of entering. And even if I wasn't up for the day, I would never take this trade. Okay. This is a trade engineered by the false reaction of those those break and retests. Too advanced for you for now. But I think that some members they see this go and they have a bad interpretation of what the candle closure is. I think that they wait for this candle to push like this. I think is what some of the members wait. They see this. They wait until the candle goes above. And when it goes above, they want to enter here. That's going to be a really bad reversal. When the candle closes above, you need to wait until it comes back into that decisional to then enter. This is the candle closure behavior. The candle closure above actually entices you to say, okay, we have potential buy side direction being created. If there's a pullback into my entry, I will take it. If there's no pullback, you don't take it. You need to accept that the trade will leave without you. Okay? Done. And this is not easy because some of you do not accept when a trade leaves without you. And it's normal, it's part of the game. What I don't like is when you guys take wrong trades. Let's say that when you miss a trade and you're pissed because you missed it, then this is normal to be pissed. But what I'm trying to understand is why some take trades that actually don't make sense like this here. Okay. And we'll continue to talk about it in this call. Now, I want to go on another example where Abby sent me a chart. Is it everything clear so far? So basically, you do your due diligence and you do not take a trade if there's no relevant liquidity taken. Okay? Very, very clear. Let's check EJ. EJ structural expectations are bearish, right? As long as this point or this point doesn't close above this point or whatever point there is, we do not. So this point hasn't closed below, has it? Yeah, so I think we're going to have to account it here, 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 here. Let's say this is the structural leg and this one is actually closing above here. So maybe these ones will be internal and this one will be external until this one is taken. Let me just draw a line here. Good. So we can know when the structure is switched. So when you start, remember, structural expectations are only a compass. I use structural expectation to tell myself, okay, next day it will be buy side or sell side. If I wake up in the morning and price, I know that the structural expectation are downwards and I see price doing this, then I'm not surprised because the structural expectation were in that direction. Now, when it comes down to liquidity, it's the same, right? Same. You have irrelevant equal lows. Why is it irrelevant? because it hasn't made a new high. So we trade only the reaction. Now there's a false reaction of this 1, 2, 3 third touch. This is the false reaction. And then you have the inducement with speed. Let's go check into the M1 if we have an entry. No entry. Price even didn't came back into the inducement POI. There's no entry here, at least. And look how it even reacted lower than last time. At least for a for the entries I showed you, there is no entry here. Price leaves. Now, oops, this becomes a inducement POI. We also have an imbalance. Pretty clear. Price pushes, creates breakout traders, creates break and retest traders. Oops, wrong thing. Break and retest traders. Engineers liquidity. Why is it? Because it's a logical push, but it's against the structural expectation. So I wouldn't, please listen to what I will say. Since I'm in hindsight, I put the stop loss here because there's a huge push to the upside. But most likely, this is the first break, the first buy from the whole sell behavior. So most likely, the relevance of the stop loss is pretty light. Tiny, tiny, tiny little stop loss because we are against the structural expectation, okay? Again, you use the structure as compass. Now we have liquidity here, build, liquidity here, build, boom, 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 boom. Here we go. Price pushes, now comes back. When you see those candles going into the opposite direction and you see a possible, let's say, entry that you potentially miss and price starts pushing to the opposite direction, your due diligence should be check on the left. What do we have on the left? We have a POI. Okay. What is this POI? It's an inducement POI that engineered a false break of structure, but it's also the push that led to the new low of that external structure. So the liquidity here is very, very, very good. But at the same time, since it's a high time frame inducement POI, let me just mute Discord. I just cannot stand when Discord. I just can't. Sorry. I'm really sorry. The boom, boom, boom of Discord is very annoying. So we have that inducement POI that created that false breaker structure, but also engineered the push. So the liquidity here is very significant. But remember, this is also an inducement POI that made a new low. So this is potentially a protected high. Now you need to use your damn brain. We have a protected high on the opposite direction, opposite. Do I have 2P here? Opposite direction of the structural expectation. Would that make sense? On the same direction of the structural expectation. So this is good, right? Because this push is the one that led to the new low. So most likely this will provide a significant reaction because we are bearish. This creates a false break of structure and comes back. So this is actually very, very good. So most likely when you see this push into that POI and you see this reaction, just when you see this here making these new lows, this should ring a bell to you to look to the left. you have this. So now there's already potentially a trade to take. You miss this one. Your target should be the low of the irrelevant, like I said, liquidity, right? But like I said, this is on the opposite direction and it's actually the first break high. So maybe most likely there is no liquidity here. Okay. Here, remember, it's the same thing that we always talk about here. This most likely is the first break and there's most likely no liquidity. Everybody understands this, yes or no? Because otherwise I have to pause. Do you understand that this is the first break? Yes, 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 yes. Okay. And I'm trying to dissect this on the best possible way. Okay. Because now we have access to the hindsight. But you understand what I'm trying to do? I'm trying to put myself into the live perspective. I would have seen this as a potential logical short because of that new low here. I would have potentially, this would be an internal breaker structure, and I would have taken this. This would be my type of trade. Okay. And I would have targeted this. But this is actually very annoying because, I repeat, because most likely there's no relevant liquidity here. But you understand this short, how it makes sense. It's an inducement POI of previous day that made a significant low that is also a protected high. So it's an inducement POI plus a protected high. And it's an inducement POI and a protected high on the same direction of our structural expectation. So now we're adding weight, right? We're adding weight into our thought process. Okay, it's good. Sell, 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 sells. Perfect. Now, look how many entries you have. Price pushes lower, creates a false reaction of this SMT. Why is this an SMT? Because we're now trading away from this. A trade away is not only, and this will be talked about in volume 2, is not only when it's grabbing liquidity, it's also when it's mitigating on inducement POI. The trade away is only a direction. Okay. So we had the last logical trade away was here, and now it's this one. Which one makes more sense? It's the one that respects the structural expectation. Okay, perfect. Now price pushes, false reaction. There's another entry. We'll go into the M1 after these ones. Pushing lower, speed and momentum into a POI. First reflex, you close most of volume. Okay. Now you can see price creates that reaction to do what? To potentially come back into the break and retest zone. Not super clear, but it's still there. The false reaction of this possible SMT shouldn't be an SMT because it has induced liquidity. So this is an inducement POI, but also it could be, you could think that it's an SMT because we're trading away from the logical inducement structural expectation protected high POI. Do you see how I'm 50-50 now, right? I'm 50. I don't know if this is an SMT. I don't know if it's an inducement POI. And the tools I give you are to dodge those kind of mistakes. Take freaking partials. And like I said in my tweet yesterday, a real trader is supposed to be able to adapt to the market, not just trade it, adapt. So even though you were not in shorts and price pushes lower, goes into that POI, speed and momentum, take money out. Now, as you can see, price pushes back, creates this break and retest, and pushes lower, creates logical liquidity here. As of now, we could even say that this could be liquidity here above, but I don't think so because remember, that would be the first break of the internal trend like this, and I don't like that. So I prefer to mark up the break and retest here, okay? This is just my personal opinion. Now let's go in M1. Okay. So she saw this PY into the inducement PY. Very, very good. We even have that internal break of structure. Very, very good. Very good thought process. The problem is you guys haven't learned it yet. When there is a counter confluence retail strategy. Let me show you what a counter confluence retail strategy is. Let me just erase all my drawings. Go. As you can see, we have that huge push. Price comes back to go mitigate this PY of the short I took. Do you notice that there is no break and retest here on that retest of that PY? Do you notice? This is what I call a counter confluence. If we don't have that retail strategy onto the same opposite direction of our entry, so let's say price would do this, and that break and retest here should be an indication not to take the short. If you go check on Euro GPY, we have this here, that break and retest that actually pushes lower. Okay? Do you see it? Now let's go back into the other example. Where was that? I think it was your GPY. And this is actually what happens here is exactly the opposite. Do you see how the break and retest here provides that false reaction and goes into that decision, that inducing POI, and then just continues? And this one actually does this and goes into the POI here and continues. But you notice that how different they are. This one is the POI that has induced. This is the inducement POI. This is not the inducement POI. It has induced nothing. Maybe you can say it has induced this, but it's essentially in that POI here. So this is not a straight inducement POI. It's more so an extreme that made a new high here. So this is okay. This is not a bad trade, but this should scare you of potential enticement to the low side. And if you see it that way, if you take a stop loss here and price comes back, look how what they did. They just came back and filled the imbalance. Do you see the imbalance from here to here? They filled the imbalance. They went into that PY. Let's go check if we can refine that bad boy. This. Oops, I'm moving the imbalance. My bad. God damn it. How they perfectly went into the actual inducement POI. So now it looks a little bit more like this one. Oops. Let me just move the UGBP. You see it. How this one break and retest goes into the inducement POI. Break and retest goes into the inducement POI. Do you see the difference? How similar they look, but how different they are. Just because of that little feature of that actual inducement POI. And realistically enough, that's not a bad trade because technically you should be able to enter that trade and you should target the low because you always target the stop loss should always be on the low of your inducement POI. If you decide to go and refine this entry, this is a risk that you have to be willing to take. I'm just going to be honest, most of my losses are because I over refine my entries. But remember, I have the psychology and I rarely make 2 times the same mistake. So if I enter a trade with a super tight stop loss, I hit the stop loss and the trade is still valid, I will wait for a better entry, but I will cover the low. You can be sure about that. You can be sure about that. So this is very important. Now, this is actually what I wanted to talk about on how to build. You see the difference between, I don't know what happens, but we adjust. Personally, I would never buy here, and this is me, and I would never buy. And probably now price will even react to this liquidity. But what I don't like is it's in Asia high POI, most likely an SMT. So for now, personally, it's done. It's Friday, anyways. Now I want to talk about entries, and this is more so about how to take a decision on where, when to stay out. And you understand the difference between are, when it's time to go into the M1 and when it's not. Because what I see about some of you guys is you see an inducement of illogical structural point, and that you immediately look for a trade. I'll show you exactly what you should look for. Let's say you have equal highs. This is always the example I love, right? Even a break and retest here, and boom, inducement. I will repeat myself. The relevance of the liquidity will depend on the level of enticement we have. So in this case, and again, I need you guys to focus. Everybody can agree that here, personally, you guys think that there's relevant liquidity, right? Is this relevant liquidity because of the enticement? Low, yes or no? You guys are so slow. Yes or no? So can somebody tell me the reason why in some cases price will just do this and continue higher, or in some cases continue lower? Is there a way for us to know this? Yes or no? Sultan J, you said yes. Why so? How can we know that? There is no way to know if we will have a reaction that will significantly create a reversal. Understanding the difference between relevance and irrelevant liquidity is important to know if there's a potential entry. The problem with those entry is people target here instead of maybe targeting here or just like a pullback. Okay. You do not know. And this is why you go into lower time frame to have a little bit more development. So let's say that this oops, this here, right? Let's say here. You have this here, price does this. See, there's this development doing. You can still enter the short while covering a significant high and have a better risk to reward that if you would have just entered from the extreme here and enter and panic for 25 minutes because you don't know if your trade is leaving. Let's go on Euro USD today and look at the perfect example. Did I already erase my trade? Yeah, this was my trade. You see this. I don't want my energy. Okay. Do you see how we push lower? We induce Asia high. This has made this low here, right? Everybody, let's check the structural expectation. We could say We could say this is internal to, I think it's pretty bullish for now. And as you can see, let's say that you see this inducement. Some people are looking to short here and they look smart like this when they see this in hindsight. They said, I would have entered here. How many times will you get smoked? Wait for this break low. Look at this false reaction of those equal lows. Comes back into this POI. Look at this significant push, taking this irrelevant liquidity to engineer another mitigation here. See? And if you enter here, I see some people doing this and target the low, and they then say, oh, I got break even. Cover the damn thing completely. Like this is a 126. It's perfect. Stop trying to be too greedy and always come back into the M5. So your point here isn't even a POI, right? So if you wanted to enter on the M5, you should at least cover this whole thing and enter like this, right? So if you want to enter on the M1, use logic behind it, right? This is the point. Your entry on the previous mitigation is your entry point. This isn't, I repeat, this isn't an inducement POI. So this is not your stop loss anchor. This one is the decisional zone that mitigated this one just to add yourself a little bit more comfort into your stop loss. Covered it this damn high and only go to break even when it makes a logical low. I see some people putting break even here and then sending in a technical chat. I entered here and I said it's risky, and they say, "Oh, I'm already break even." Okay, it's like drinking and driving. I'm not drunk. I just drank a little bit, but you still did it. Putting yourself into this BE so quickly will just create so much frustration when price will come back into your POI and just melt. I don't want to use the term let your entry breed, but it's actually what you should be doing. You should put an auto BE here and accept the risk. I don't do this because I'm a greedy bastard. But the problem is when I hit the BE, I don't care. Like I move on. Like even if I would close my whole trade here, I just move on. Like you need to understand, I do not care about losing a trade. And this is what you should be doing, entering on the M1 with M5 expectation or cover the whole high. Wait, just be patient, build this patience. And as you can see, you don't know that this is a logical inducement trade away until it makes that significant low. Oops, that significant low here. And you enter here. I was sleeping at this time. I came into the computer very, very late. So what I saw is this is the push that led to this high. This is also, if you see it pretty clearly, this is the only point that has been mitigating this decisional POI. As you can see, price does this expectation is to go higher. If they fail to make a new high, we could expect a new low taken, and these ones become actually internal, and these ones become external. And this is trading into the inducement. It's a little bit more complex, but I'll get to another video. I just don't want to explain that thought process now. But when I took my trade, very, very simple. Price comes back into this SMT. Why is this an SMT? Because it's trading away from the confirmed most logical trade away because it made significant low constantly. Okay. We have a false reaction, comes back, fills this imbalance, If this is the false reaction, this is a false reaction POI, or we call it in other terms an enticement POI that you will learn in volume 2. This becomes a relevant break of structure. Now people will say, but Joe, is this a relevant, a false break of structure because there's speed and momentum? How can this be a false break of structure if you respect the internal trend? It's on the same direction than the structure. So it cannot be a false break of structure because it's on the same direction that the actual trend. If you look at it, here, it fails to make a new high of here. You see it? So if we go here to this point, and this is more advanced, maybe you guys weren't ready, but I know. If you go here, this becomes the higher time frame FBOSS of the structural leg. IF boss, sorry. IF boss. IF boss. I know it's advanced. I'm very sorry if I'm losing people, but you understand that this is from the expectation, switching the trend and creating that SMT. So for me, I was just targeting the next enticement zone that was a higher time frame SMT. False reaction, enticement POI. I took this bad boy here with the imbalance price. I'm going to tell you exactly what I did. If people are like, oh, what have you done? Nothing. This is here, right? The price went there. Just press sell when it was like this. I think when price did this above here, let me just check my screenshot. When I took it, yeah. So it was when price went here. I just took this one like this. That's it. And targeting the next enticement zone. I just decided to close everything here because I just didn't feel like trading today. But you see how it makes sense. The only thing impressive about this is the stop loss size. Because I know for a fact that this is the point that led to the new low. This is the point that has a imbalance. Look how long it took about before taking the trade. 6 minutes. As long as we don't go above this high, for me, this trade is still valid. And is there any other entries after? Of course not. Right? Look how they fake this point here. I just decided to close and how they continue lower. Why have I taken a trade immediately without waiting for confirmation? Is because I was up for the day. If I wasn't up for the day, for the week, whatever, I would have waited for this until it comes back. And then I would have taken. Okay. Look how many goddamn entries you have after the extreme. People want the extreme. Look at this. Imagine you would have entered perfectly on the extreme. Okay, let's go into the M1. Perfectly on the extreme. Look, okay. These two bitches, I have a better risk to reward. What was my entry? Let me just check my entry on my MT4. 54. Oh, good. I'm good. 54. This was my entry. It has a better risk to reward. But do you know how much less stress I have about entering this instead of this? Look how long it took for you to TP. 2 hours. 25 minutes. The only difference is the patience. A lot of people want to be cool and be at the top, but usually more confirmed and more developed PA actually provides with better risk to reward. I think I'm getting a little bit too ahead of myself and I'm actually spoiling some videos because basically what I was talking about is like when you have an inducement, right? Inducement, this becomes the relevant break of structure to come back. I showed you how to trade into that relevant break of structure and it's into the mitigation. This is a little bit too advanced and it will be discussed in the future. So I'm sorry if I confuse people with this. but you will all learn that in the future. But for now, if I lost you guys, I'm sorry. Um, but that's basically what I wanted to talk about. I wanted to talk about how it's important to build yourself the more evidence that you can possibly in a day completely. Like, have you seen how we switch it 2 times our idea already on your GPY? How many times we switch it? Because you don't know. And I don't care who was your mentor before or who is the guru you're following right now. Nobody knows. If they would know, they would be so rich that you wouldn't even know about them. Remember, if it was that easy, I would be way more rich. I think that what is important as a trader is to be able to be flexible. If you see the structural expectation higher and you cannot accept that in lower time frame here on this little thing here, right? This is what the retailer calls a complex pullback. If you cannot accept the fact that in here you will have downwards price action on the intraday, this is because you haven't worked enough and probably haven't done your due diligence on understanding what structural expectation means. Every single pushes are just a compass. Every pullback you cannot confirm until where it can pull back until here. And then you will say, yeah, but Joe, I took a buy here because we had logical liquidity here, but you cannot know if it will go here because you're still on the pullback of that new high. And this is why we stack the evidence to help us to understand the direction. And this is why I can take a buy or a sell immediately in 25 seconds, one after the other, because my thought process has switched. My biggest issue with trading is I arrive too late on the computer. I should sit down 30 minutes, have my whole idea. But the problem is, I like sleeping, so I wake up always late. And I think that I don't want to try to change a working formula. I'm making money that way, so I shouldn't complain. But I think the thing I want to fix is probably have a better understanding of the day, so I could dodge a lot of stop losses or maybe a lot of break evens. But at the end of the day, it doesn't really matter because I'm still making money. Because what actually helps me is being flexible with that thought process. Use the reverse trading technique to help you. I use it every day. Understand that we were in shorts here and we were targeting this low. This low hasn't been taken because this is the first break to the upside of the opposite side of the actual structural expectation. So most likely there's no liquidity here. And it also induces these equal lows. So you accept the damn fact that this will hold and it leaves. And you see how now we react to this Asia high inducement. PY, maybe an SMT, we don't know. I will know when price will make this new low, close below, right? If it does this and this point doesn't break in retest anything, I'll take the damn shorts until where? Until the break in retest. Boom. Although 127, 126, 124, we don't care. We take what the market gives us. Boom, 125. See? But you need to see is this putting a break in retest? No. See? So you're just trading the pullback. Is this a pullback? Of course. Why? Because we're almost switching the higher time frame expectation. I mean, this one, yeah, we discussed that this one made the new low. This one made the new low here because of this. So see how it has switched and we're just reacting to this liquidity into that inducement. Does it mean that this will reverse? No, right? Take the damn short when it comes back to, let's say, this point, and then price will go into a break and retest, whatever, and take the buy and continue and just take the Asia high. Boom, whatever. I'm getting ahead of myself. I think that it's maybe too simple, but yet too complex. And the only obstacle between being simple and complex for you guys are your emotions, because you have everything you need to trade And I think what's putting a toll in your trading is either the missed opportunities, the stop losses, or the actual fear. Try to just build that analysis trading. Accept what the PA will do. Accept today I wasn't looking for shorts. I wasn't looking for trades. But I opened EU and I see this push and I see price coming back into a. I'm like, I'm just not going to ignore it. They give me free money. I'm going to take it. But you understand how I wasn't looking for a trade. The trade presented itself to me. So there's a big difference between wanting to be in a trade, looking for a trade, and actually accepting a trade. And the big way to notice this is take a stop loss. You will see in your brain, take a stop loss, your brain will automatically go back on the chart and search for another trade to come back from this loss. This behavior is sabotaging all your work that you have done because you're actually trying to fix a mistake that you have done by making another mistake. Trust me, when you hit a stop loss, stop and wait. Wait for a confirmed trade. You have no idea how good you will feel. So, that was my little call today, a little pep talk. I'm sorry. It wasn't really about the entry. I think I got lost a little bit on the call, but I think it's important that the message I was trying to pass is you have no idea what the market will give. Try to put the odds in your favor, and whoever tells you that trading is not speculation, he's not a trader. Because otherwise the market would crash because everybody knows what it does. I know it looks fancy online to say, I know this, I know where the market will go, but realistically, it's not the case. Patterns come back. You see these trades often and you have a good gut feeling when it happens. So, of course, you have a better idea what will happen, but precisely, it's impossible. So, try to build that analysis and try to build that wait time. Do yourself a favor. Try to be an observer a whole session and see how you feel. During one full day, just observe the trade, the PA. Once a trade will go here into an entry and you will feel it in your stomach, you'll say, I really feel that this makes sense. This trade is respecting everything I've seen so far. If I was on the chart or on the MT4, I would be able to enter there. And I think that this is logical for me. And when it goes into your direction, chase that feeling every single time you're in a trade. This feeling is instinct. We are human. We have instincts. We know for a fact when something happens, when we have fear, when we have trust, when we are confident, this all comes from the gut. So it's very important that you trade with your feelings and not with your emotions. So I hope you guys appreciated the call. Let me just stop the recording and